Welcome to Crypto Sapiens, a show that hosts lively discussions with innovative Web3 builders to help you learn about decentralized money systems, including Ethereum, Bitcoin, and DeFi. The podcast is for educational and entertainment purposes only, and it is not financial advice. Crypto Sapiens is presented in partnership with Bankless DAO, a movement for pioneers seeking freedom from the limitations of the traditional financial system. Bankless DAO will help the world go bankless by creating user-friendly on-ramps for people to discover decentralized financial technologies through education, media, and culture. Hello again, everyone, and we are back with the first episode of 2022. Today we are talking to Yenwen Feng and Nick Tong with Perpetual Protocol about perpetual swaps, concentrated liquidity for derivatives, and scaling Ethereum on Layer 2 solutions. We cover Perpetual Protocol v2, aka Curie, and their choice to migrate from XDAI to Optimism. Let's get started. So let's welcome our guests here today, Yenwen and Nick. Why don't we get started with a brief introduction to yourselves? And if you wouldn't mind, kind of give us a bit of a backstory as much as you want to share or feel comfortable sharing in terms of, how, what got you started in this space, how you fell down that rabbit hole and how you ended up, working on this project. So Yenwen, why don't we start with you?
Thanks for having me. I'm Yenwen. I'm one of the co-founder of Perpetual Protocol. The co-founder and I, we work on different projects since 2015, and we kind of fell down the crypto rabbit hole in 2017, the end of 2017, because of CryptoKitty. I used to do game development, so the first time I see that you can actually own an asset in online, I think that's really exciting. But at that time, because I think the platform is not ready yet, so we have a hard time. So we actually want to build a game at first, but we have a hard time because there are no tools, and then people are just kind of getting to know crypto more in 2017. So we end up abandoning that idea, but we are more attracted to the whole DeFi. How we can build a financial system on chain and then have it be more transparent, more trustless, more permissionless. We really like this idea, so we decide that we should spend our time on this. And actually, at that time, there is no DeFi yet. Nobody called the whole decentralized finance DeFi. I think only Maker and the Compound at that time, they're still working on this kind of concept. So at the time, we want to work on, in 2018, we have this new idea that we want to construct an option protocol on chain, but it actually failed. It's hard to get attention, and then it's also there are some system design issues. So it's our first time. So I think it's really hard to design on chain protocol. So, but we have been talking to a lot of people. So we end up joining the Binance. They have this new accelerator. So we joined that accelerator. We kind of working on another idea that actually a crypto accounting software. And then actually the market crash. So we've been in the ecosystem for a while, lay down and working with the content to deal with some accounting stuff. And then quick forward to 2000. So we have been doing that for a year, and then quick forward to 2019, the end of 2019, we actually see the growth of Uniswap. That's really impressive. We feel that the AMM is the thing that we haven't figured out, in 2018, but it actually works. And then we also look at synthetics. We learn a lot on synthetics. Their token model, their staking model is really interesting. So we feel that if we combine these two, we can probably, bring back our option idea. So we actually pivot. We drop that accounting software idea, and then want to build derivative protocol. At first, we work on like options. Feel it's so bit hard, and it's much harder than like other derivatives. So we end up, trying to do a perpetual protocol online, on chain. So we start like trying to design that AMM, and spend like several months on this. And in like the beginning of like 2020, we have this new idea that we call this virtual AMM, which is like it's kind of like a methodology of how we can place virtual asset into an AMM, and then we actually can have an AMM that trade against each other without liquidity provider. So that's actually the thing that's we really excited about, and we go ahead and then build that. Build the perpetual protocol. At the time, we call it Strike protocol. So that's actually how I got into like crypto and then the whole journey. Yeah.
Yeah, that's wonderful. Thank you for sharing that. Nick, how about yourself? How did you get started in this space, and how did that lead you to Perpetual Protocol?
I've been in and out of this space a couple of times. I guess the last time stuck. So way back in 2013, bought Bitcoin, got goxed, so kind of left the space for a bit. Went into kind of startups, founding my own, and then in about 2016, came back again and started running like an arbitrage fund. I left again post the massive crash when things got quite quiet, and joined another fintech startup as kind of head of product, and then more recently, just around kind of Uni V2, around the time when they launched or just before, really got into the balance ecosystem as kind of the first project in DeFi. From there, just started helping out and reaching out to a whole bunch of projects. Joined the Perp community, and eventually just asked and landed a role at Perp, which is now where I'm at, and currently running strategy and partnerships.
Great. So there's a few things you talked about here that I do want to touch on, but I think it's only fair to do an introduction to the project or the protocol itself. So what is Perpetual Protocol, and really kind of what sets it apart from some of the other DeFi protocols that we may be familiar with?
Yeah, sure. So let me do a quick intro. So Perpetual Protocol. So we are building this like decentralized perpetual swap contract on chain, and with an AMM. So we have like this special new design that we launched last year called virtual AMM that I just mentioned. That we figure out like how we can place a virtual asset. In a XYK like AMM. And actually, we don't need like a liquidity provider. In that AMM. So I think that's how we differentiate ourselves from others. And that's a V1 of like our Perpetual Protocol. And then we just launched V2 like 2 or 3 days ago. So V2 we actually take a step forward, and then we use Uniswap V3 as our kind of like a base layer. So in V3, you can actually, so it's still a perpetual, contract protocol. So it means that you can leverage up to 10x, and then you can also short, the asset you want. We don't really need to, own the real asset. It's all perpetual contract. But with Union V3, we provide concentrated liquidity, so you can, I think the capital efficiency is much higher than our V1. So yeah, I think that's just a quick intro of like what we did. I think we just have like this the team is very good at AM design. So yeah, that's about it.
Yeah, thank you. So for me, that leads to, I guess, maybe the next question. And so I think for many of us who are familiar with DeFi, perpetuals isn't something that is, kind of the traditional flavor of it. So could you give us just a brief description of what are perpetuals and really how that makes DeFi, or how it improves DeFi, or how it improves or makes that experience different?
Sure. I guess like if we start very briefly, like I mean, Uniswap is a spot kind of exchange, and you have kind of the underlying token. You swap one for the other. So you put in USDC, you get ETH back, for example. The next kind of iteration of that, I guess, from a product perspective, was then kind of, okay, how do I get leverage on that? And so you started to see kind of margin protocols, which is, okay, I will borrow more USDC to kind of either buy or sell ETH, for example, and I'll just borrow the assets. Well, it's not necessarily a problem, but one of the issues with that was that you can imagine the borrowing cost is quite expensive, and so it's not as capital efficient as you would like. Perpetuals basically is then one step further, where it's kind of a synthetic asset where you don't hold the underlying asset, so you don't hold the ETH. When you buy it, you don't hold Bitcoin if you're buying it, but it just reflects the price of that asset and how it kind of moves. And the way that we've done it, I guess, is popularized, I guess, by BitMEX, is the perpetual kind of future product. Futures in itself, I guess, normally in the TradFi sense, it expires after a certain amount of time. And because of the expiry, the price of kind of the market is forced down to the index price. The index price being kind of what the actual spot market is. So if ETH is trading at like 4,600 on kind of this futures market, and on Uniswap like 4,500, for example, over time as it gets towards the end of expiry, that 4,600 will converge to 4,500 because people can arbitrage it. But in I guess in a perpetual sense, we then kind of removed the expiry component. So and we've replaced it with, I guess, a funding rate. So the funding rate tries to do the exact same thing, but because it's a perpetual, you don't need to worry about expiry. So a lot of the time you have to worry about kind of, how do I roll over a contract, or how do I like continually think about managing my position? But in this case, you can literally just go 5x long, for example, and not worry about it too much. And how the funding rate works is quite simple. So if your current market price, in our case again, ETH was 4,600, and if the index price again, spot price, let's say is 4,500, then what happens is every hour, the people who are long will pay the people who are short a funding rate. And the idea of that really is that the higher the difference that is, the more expensive it becomes, and so people are more likely to kind of start selling, or you get more short sellers basically, and those prices kind of line up together. So I'd say those are probably the high level mechanics of kind of perps.
Yeah, thank you. So over time, I guess, how has the Perpetual Protocol grown, evolved? What are some of the results from the product so far?
Sure, that's a great question. So like I said, we launched like V1 the end of last year. So actually December. It's almost a year stuff on there, and we have around like 33 or 34 billion trading volume totally. I mean, we don't incentivize anything. I mean, like it's just like people trade here. So I think that's really great. One thing I want to mention is that the Perp V1 actually built on top of SDAI. So we are actually one of the, first like projects, like DeFi projects, moving on to a sidechain solution. So it actually benefit us because the gas price is low. So, the cost of transaction is pretty low, and then the traders can actually place a lot of trades. Build their own strategy more freely on SDAI. So I think that's one of the reasons we have this like high transaction volume.
Oh, that's interesting. So actually, that's one of the questions that I usually like to ask of projects that are on the show. And really, that is, what are some of the benefits that people can reap from using this protocol or this project, right? And it sounds like one of these things is the ability to use it a little bit more, I guess, freely, just because of the cost benefits that are associated to it. So was that one of the main reasons why Perpetual Protocol was launched on NextDAI originally?
Yes. So cost is definitely a big factor for the traders. So, yeah, on SDI, the gas fee is actually is pretty low. It's like several, maybe like a transaction is several cents. And also at the same time, I mean, our transaction fee is like 10 base point, so it's not that high. I mean, compared to Uniswap. So, I mean, like it just like lower the cost of your trades. So if you, I mean, like if you have like I mean, large trade or many trades, I mean, like a perpetual, I mean, contract or perpetual swap is much like a lower cost to you. And also at the same time, you can leverage up. I mean, like without borrowing, you don't need to pay interest compared to like margin trading. So that's also benefit. And yeah, so I think that's about it. Yeah.
You mentioned earlier that when you were developing Perpetual Protocol, there weren't very many DeFi products around, right? I think you mentioned Compound. I think you might have mentioned also Maker and Synthetics. So, were you one of the first to move to XDAI? Because I think all of those projects were built on top of Ethereum, if I'm not mistaken.
Yes, we are kind of like one of the few like DeFi projects move on Sky. I think we still like one of the few like DeFi projects that on Sky right now. I mean, because I think most of the projects they go. I mean, last year when we launched the project, I mean, most of people are on ETH, like you said. Now lots of people looking for like layer 2 or sidechain solutions. When we want to launch the protocol, actually that's kind of like October last year, and the gas price is actually quite high. Not as high as today, but at that time, I mean, like you place a trade, you probably cost you like $100. We just don't think that works for Perpetual Protocol or actually for any trading. So yeah, so we are just like one of the pioneer to just move to like layer 2 and then see how it goes.
Right. So what would you say were some of like the challenges in doing something like that, right? Kind of going against like what other people were doing in terms of like where they were launching their protocol, and what were some of the clear advantages? Obviously, the maybe the speed and the cost would be two. What would you say those two things would look like in terms of like challenges and opportunities, I guess?
Yeah, that's a great question. The challenge, of course, is that there is like kind of like no one like before us to, I mean, like deploy on Sky. I mean, like for DeFi project. So we have a lot of internal debate. Like, should we go to DeFi? I mean, like Sky, or actually should we go to Matic at that time? So at that time, Matic actually just finished their proof of stake client, and then they kind of like relaunched their whole protocol. At that time, still called Matic. And we have like like some engineer support that we should go to Sky, and I mean it's just like lots of debate because there is no like clear route to this. So we just I mean just.
It sounds like you were experimenting, right? I mean, most of this space is just really built on experimentation, anyways.
Yeah, but it did take a lot of I mean like research and to kind of like make that move. Yeah. So, I mean, I would say that the challenge is just like the team has to kind of like convince that themselves to do this. I think that's actually the thing that we spend most time.
Yeah, maybe the protocol wouldn't have scaled so quickly, or maybe it would have been some of those other challenges would have been a lot more clear in terms of people wanting to create those strategies, like you mentioned earlier, on Ethereum versus maybe they weren't so free to do it the way they were able to do it on XDAI.
Yeah, true.
Tell me a little bit about the Perp token. How does that fit into the protocol itself?
Currently, the main usage for kind of the Perp token is around staking. Staking currently earns some inflationary rewards. The idea with kind of the Perp token really is it currently acts as a backstop to the protocol. So similar to what I guess Aave's done, in that, like, if the insurance fund gets drained, then kind of the perp token holders are the ones that are kind of backstopping it. I would say currently we are still working on like future kind of tokenomics, so nothing is like super finalized. But the way that it's kind of shaping out currently is the stakers have kind of two roles. So one is they can stake in kind of the public markets, which is kind of all of the markets that we currently have. They earn a percentage of the fees, and then if in the case where the insurance fund gets hit, goes to zero, then up to 30% of their staked perp gets slashed to repay the debt. Then from that, they can take their staked perp and they can then stake that into private markets. So very quickly on private markets, the idea of private markets is that if you look at all of the perpetual kind of protocols that kind of exist, both in, I guess, DeFi and CeFi, everything is permissioned, right? Like you have to go through a process to kind of figure it out. And there's a really good reason for that, because if you launch, if you launch a dog token, goes to zero, it's going to have impact on the insurance fund, and that will be negatively impacted. So with private markets, what we see going forward is almost like private market DAOs, where all of these markets that they want to run are kind of very isolated. So you will have this, isolated in the sense of the insurance fund is isolated. So a private market DAO may run kind of 3, 4, 5, however many markets they want. And the insurance fund is only shared between these markets. So you could launch your set of dog tokens if you really wanted to, but you're taking the risk of doing that. Now, perp tokens then come into play here, because you need to use your staked perp to launch those private markets. And what that allows you to do, is you're again backstopping those private markets. But what that means is you take a larger cut of the fees from those private markets. So as a perp holder, if you stake in kind of both public and private markets, you'll then take a percentage of fees from the public markets as well as a percentage of the fees from the private markets. And then that's probably the main use case that we're seeing right now. Again, it's kind of we still need to fine tune and kind of tweak it before it's finalized. The second piece is there's kind of a lot of rewards programs, I guess, that we are coming up with in the future, and a lot of this will require staked perp in some way, shape, or form. We'll still kind of probably have a tier that people who don't stake perp can still have access to, but the idea really is you might have 3, 4, 5 kind of tiers of varying levels of staked perp, which then kind of impact the rewards that you're able to access and so forth.
So how has any of this changed or been improved now with the release of Curie?
I guess with Curie, we're one step closer to kind of getting there. In V1, there wasn't a very large kind of emphasis on building out the staking mechanisms and so forth of the perp token, and that was just because we had to focus really on launching kind of V2 and kind of staying up to date with that. So with the launch of V2, we're able to kind of dedicate a little bit more time and kind of think through this a little bit better and spend a little bit more time on the research side, just given that whatever tokenomics kind of solidifies, it's going to be fairly like, obviously it can be changed with governance and whatnot, but we want to set the right groundwork so that it's kind of lasting at least for the next kind of 6-12 months, let's say.
Walk me through just Curie V2, right? Because that's a major release, a big update to the protocol. What are some of the things that have been updated to the protocol? Looks like also a change on where it's operating, which it's on Optimism. Walk us through and give us an introduction to what that looks like and what that means for the future of Perpetual.
Yeah. So I guess first off, we have moved from XDAI over to Optimism, as you mentioned. We've done that because we care quite a lot about composability. So I think we have, the last time I counted, like maybe 10, 15 projects that are directly integrating with us right now. There's probably another 10 in the pipeline. And so being on kind of a layer 2 where people actually want to kind of build on is kind of quite key for us. And we had the problem where, for whatever reason, I don't know why, people just didn't want to build on XDAI. And so moving over to Optimism kind of really, really helps with that composability piece. And then from a protocol kind of perspective, there's three major categories, I would say, from a V2 that we're looking at. So we've kind of staggered them into phases. So the first phase, which is the one that we have deployed right now, is probably the biggest one, I would say. And that is moving from a Uniswap kind of V2 model to a Uniswap V3 model. So that means we've directly integrated with Uni V3. I would think of it more as like using Uni V3 as kind of like our accounting or our pricing engine, I guess. But what that did is it changed. Like on the surface, it looks quite simple, but it's changed a whole bunch of parameters. So we now have LPs who can kind of provide liquidity. They can be kind of like market makers and whatnot. And so the design space of what you can do on this kind of AMM-based perpetual product has opened up drastically. And this is kind of why I think a lot of projects like the way we do it, because your price is not determined by a formula that's been set by someone. It's quite dynamic now. You can kind of do a lot more than you can before. So that's the first piece. And that's the one that we've currently deployed to Optimism. The next two phases, we're looking to kind of deploy in the next kind of 1 or 2 quarters. And the second piece around that is trying to get to centralized exchange kind of from a functionality perspective. So we want to offer multi-collateral types. So being able to deposit ETH, for example, instead of just USDC, and being able to trade against that. And then cross-margining, which we have actually implemented in this release. And then the final one is the one that I talked about, which we're particularly excited about, which is kind of private markets. And I think I've already gone through it before, so don't need to go through it again.
Yeah. So I always like to imagine that our audience doesn't know what some of this vocabulary means. So would you mind kind of giving us maybe a brief 101 into some of the benefits of like multi-collateral and cross-margining as you described being available in the future on Curie?
Yeah. So cross-margin is already available. And what it So there's two types. There's isolated margin and there's cross-margin. So the best way to think about this is when you open up a position with any form of leverage, there is a liquidation mechanism, which means that if you bet too much, you will get wrecked effectively, and someone will come in and close your position and take a percentage of your position, and that's just to ensure that kind of the system doesn't have any bad debt as a whole. That liquidation kind of mechanism depends on the margin that you have. So you always have this concept of having to maintain a minimum amount of margin for a position. Now, with isolated margin, what that means is that each position that you have, let's say you open an ETH position and a BTC position, they will both require specific amounts of margin for each one. And so when you open a position for, let's say your BTC one, we take, 100 USDC as your margin. When you open your ETH one, let's say again, we take 100 USDC as margin. What's happened now is we've taken 200 USDC in total. And they don't these two margins, they don't talk to each other. Whereas with cross margin, what we can do is instead of depositing, collateral into the positions themselves, you can imagine that you have a wallet that you would deposit into. So now all I would need to do, for example, is deposit 100 USDC into this wallet, and I could open the same kind of BTC and ETH positions. And so it's a lot more capital efficient because the margin requirements are kind of shared across all of my positions rather than with some of them, rather than them kind of being isolated. So that's kind of the cross margining element of it. And then I guess from a multi-collateral perspective, I don't think we have a super solidified. We have an idea of what we're going to do, but the effective idea is imagine you have a compound within Perp, I guess. So you would put in Ethereum, you could then borrow, let's say, 75% of that Ethereum in USDC in a $0, 0% loan, and then you would trade whatever you wanted to trade against that. So it opens up. Why that's interesting is it opens up a lot of different use cases for people. So one really basic one is Lemma, for example. They are building kind of like a basis, almost like a stable coin. So if you imagine that if you can put in 1 ETH into Perp and you can exactly short 1 ETH, you effectively have kind of like a synthetic stable coin. Because if ETH goes up, then your collateral value goes up, but your position value goes down, and vice versa. So you almost have this synthetic stable that now is not dependent on kind of Circle holding USDC or hoping that Tether has your money. And so it opens up this whole new design space, basically, for people to kind of deposit assets that they normally have, but they still want to kind of utilize it and want to trade it. So similar to, I guess, how people use Compound or Aave right now for leverage, but kind of this is 10x of that.
So walk me through the decision for launching, Curie V2 on Optimism instead of, like another solution like Arbitrum.
Actually, like when we design Curie, we always targeting at Arbitrum because I think they are. I mean, like the ecosystem is strong, and then we really like what they provide. I mean, they design. So we actually, built on top of Arbitrum, and then we launched a testnet trading competition 2 or 3 weeks ago. Actually, and it actually worked quite well until the last day. We have some bandwidth issue with Arbitrum. We see the gas price actually spike a lot on the testnet. At first we thought that you just it's a testnet, so the bandwidth is a cap. So we notified the team, and then we asked them that we kind of we happen the same mainnet, and then they actually respond that the testnet and the mainnet actually are the same. So which means that we might create some a gas spike on the mainnet. With the same traffic. So we kind of dig into it and then found that they have a cap on gas per second. So which means that the layer 2. So I think all the layer 2 roll up system, they separate the gas into layer 1 gas, layer 2 gas. So for Arbitrum, they have this a cap 80K per second. Gas limit on the layer 2 gas. But we actually looking at our transaction. Most of our transaction costs around 500K. Because it's more complicated, it's a leverage platform. So we actually did a lot of calculation, talked to the team a lot, but they are not really comfortable raising that cap. So we kind of have to make a decision again that we need to maybe use other platform. So we end up going to Optimism. We talked to the Optimism team also 7 months ago, and I think it's quite strong. But they have this issue that it's not fully compatible to the ETH client. So for the Solidity contract we built, we have to modify that. So it's actually a major blocking thing that we don't want to do. We want it to be 100% compatible to the mainnet. So we just so Optimism is not an option at that time. But with their V2, they actually fix it. So it's 100% compatible to the ETH client. So it actually, we are porting our stuff on Optimism. Of course, there are details that we need to learn more, but it only costs us 2 weeks, and then we launch on Optimism. Just 2 or 3 days ago. Yeah. So it's just a reason. I think it actually it'll be like I feel the same when we launched the V1 on Sky. I mean, just like this platform are so new. Not lots of people like of course they are like projects that building on top of it, but they are like limited that not yet test out yet. So we kind of like just need to test it and then kind of like make a decision on that, even though there are not lots of people like working on that platform yet.
Right. But it probably made it easier, the fact that Uniswap is there too, right? Because I think I heard earlier there's a dependency to Uniswap, so maybe that just made it a bit easier as well.
Yeah, of course. Yeah, we need to build on top of Uniswap, so that's why we only consider Arbitrum and Optimism. And also, we are now once like Arbitrum, they have this like new update, Nitron, probably like in Q1 next year. We will definitely reconsider like going back to Arbitrum once they lift that gas limit cap.
Walk me through this here, right? Because the topic of the discussion is, building DeFi on layer 2 solutions. So would you say that there is a consideration of running Curie on, on Optimism and Arbitrum at the same time and unison?
Yes, definitely. It's just like pros and cons. I'm running on more chains, like we can reach more users, but at the same time, the liquidity will be fragmented. So, it's just like a choice to us. So we also like consider other chains, maybe like Polygon, maybe others. But I'm personally kind of like ETH maximalist, so I just want to build everything on top of it. So that's just myself. But like Uniswap also like consider like porting to Polygon. So once I have that, we will definitely take a look. And then I think on Polygon there is still like a fee benefit. Like I said before, the lower the fee is, the more trading we can have. So definitely also interested in that as well.
Yeah, at the end of the day, right, it's a matter of making sure that the protocol is accessible to the users that want to use it. So following them to where they're at and building it and giving them that ability is, I guess, part of the focus of where you decide to launch and that strategy. So you wrote on one of your latest blog posts announcing Curie that one of the most exciting aspects of Curie is its high degree of composability. Talk to me a little bit about that composability. What does that mean to Perpetual Protocol? And what are some of those ways that the protocol itself is composable and being used by other projects or using or integrating with other projects, I should say?
Yeah. I think like to kind of frame the outlook of what we see, at least, like we believe very, very heavily in composability. And I think down the line, like let's say, it's impossible to kind of forecast anything past like 3 months right now, but like assume like down the line, we actually believe that a large majority of the trading volume will come from partner projects that are built on top of Perp, and the end user won't even know that they're trading on top of Perp. So we believe quite heavily in that, and which is kind of why we've taken a very different approach to, I guess, most other projects in the space, and very, very heavily pursued kind of partners to build on top of Perp. And what does that kind of mean, and what does that kind of look like? I think if you look at the design decisions that we've made, for example, the simple fact that we are built on top of Uniswap v3, that was quite a deliberate choice. What that now means is that kind of all of the Uni v3 kind of LP strategy providers that are currently building on top of v3, because they're building on top of, if they port it over to Perp, they're building on exactly the same kind of infrastructure, I guess, and the same kind of concepts. We've basically got all of the major ones that are integrating and seeing how they can port their strategy over and add leverage on top. So that's kind of like a very simple use case of why we kind of made the decision that we've done to kind of use Uniswap v3. And because I guess we're very big fans of that, we have been funding, I guess, a lot of grants to kind of help either from like a research perspective or kind of building on top of Perp, and then hopefully if it kind of works on Perp, you can imagine it also works on kind of UniV3. So we're trying to kind of help build the ecosystem in that sense. The second point, I guess, is that we are fully on chain, so we don't have any element of our system, I guess, which is centralized. And what that means is that partners can integrate with us in a completely permissionless way. So we've had many partners come to us. We've tried to kind of integrate with other systems, and because there are components of it that are centralized, it's very hard for them to kind of permissionlessly integrate and then kind of build on top of. And then the last piece, I guess, is really around optimism. So just by being on the fact that we're kind of on a chain where everyone wants to be, we're seeing a lot less pushback in terms of as opposed to like when we were reaching out to people with XI in the first place to do that. And I guess the only other thing I would say is probably from an AMM perspective, it makes it quite easy to kind of integrate with us. You don't need to kind of worry so much about kind of trying to connect in with kind of like an order book and a matching engine. And so it's a lot simpler in that regard.
Great. Thank you. So one of the things that you said really early on in the discussion, I think that was actually Yenwen who mentioned it in terms of the evolution of DeFi from the moment that Perpetual Protocol was first being developed through today, where it's at Optimism. A lot has changed, right? I mean, the landscape is very different, not just in DeFi, but overall in Web3, I think. So what do you think, if you could make a wild guess, I know you can't predict what's going to happen in the future, how do you think that DeFi is going to continue to evolve in the future? And just generally, what is DeFi's role going to be in Web3?
That's a great question. So, okay, in general, I think DeFi is only like, it's only like 3 or 4 years. And then it actually be more like popular only like recent, like a year or two. Actually, I think just like maybe 1.5 year. I mean, Scarf on like Compound issued their token and then the whole DeFi summer, right? So it's just like a year and a half before. So I do feel that we have lots of things that we can build. I think on the spot market side, I think we have accomplished lots of things. And but on the derivative side, I mean, of course, like we are doing, I think we are doing well. But compared to like central exchange, there are still a long way to go. UIDC is doing well, but also like compared to like central exchange, I mean, there are still like a lot of like thing that we can do. So on the derivative side, I think that's definitely like one area that we can do much better. And then there are lots of growth in this area. And the second thing is that I mentioned that the gas fee. So, I mean, because everything, I mean, on crypto is so popular right now, so gas fee is so high. There are lots of competition from like Yenwen chain. So they offer like less gas fee, but I do feel that the user haven't moved out from ETH yet. Lots of users stay in the ETH ecosystem scale. So with like layer 2, I mean like, and also like ZK roll up in the future or like other things, I do feel that lower fees definitely will increase the whole trading volume and then adoption for the DeFi project that we see right now. So I think that's the second area that once everyone moves to layer 2 and then layer 2 can further cut down the costs, I do feel that we can have much more like either like volume, either like trading, either like user, and also like strategy that you can build on top of DeFi. So yeah.
Yeah, thank you. Nick, did you want to add anything to that in terms of like what you think the future holds for DeFi and how Perpetual Protocol will, have a place in that as well?
I mean, maybe this is me being optimistic, but I'd love to see in the future, at least, like if we look at the users, there's always going to be two groups of users, I feel, right? Like there's going to be the users who are us within the ecosystem or people who may not have access to kind of like a solid banking system who wants to hold their keys. But I also think that there's always going to be a large group of people that are very happy with a bank custodying their assets because they don't want to know how it works. So like if I try to convince my grandparents, for example, like there's no chance that they're going to download MetaMask and try use it and whatnot. So I almost see that in the future we will probably have kind of these institutions and this kind of, I guess, CDFI style products that cater to this kind of audience that will then plug into DeFi in the back end. And that's kind of where I see the power of what we've built, right? Like, we are positioning ourselves exactly for that kind of future where, we will still cater towards kind of for people who kind of want to own their keys. And obviously we're not going to cut anyone out there, but we're also getting ready to be the infrastructure layer for these kind of CeFi products that then want to tap into DeFi and want to provide a better service to their customers through this kind of decentralized infrastructure. So that's kind of what I see in the very, very long term. How long, I have no idea.
That's a wrap. I hope you enjoyed this conversation. If you'd like to learn more about Perpetual Protocol, go to perp.com. That's PERP.com. And on Twitter at Perp Protocol. Thanks for listening to Crypto Sapiens. Please give us a follow, like, and a 5-star review wherever you enjoy your podcasts. And stay tuned for our next discussion.